Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor. I got a little bit of a late start today. I've gotten to where I've been exercising for at least an hour a day, and the more that you do that, it seems that you sleep even better than you used to. I have been, the last 2 days, I have literally slept better than I have in a long time, but I've also felt really tired because I've been doing low carb. If you try to do low carb while you're exercising, sometimes you feel like literally weak, like you can't do anything. And I've experienced that a little bit yesterday. Well, I got this first thing from David DePriest at Dave6971. We woke up this morning to the markets around the world plummeting, but guess what's doing well? Digital assets. And this is pretty much what I think the theme is of where everything's coming from. Currency war begins. Chinese yuan crashes past 7 to new record low. Global markets tumble after Beijing suspends U.S. agri imports. I try not to go onto this site because it's got so much advertising. Says to suspend imports U.S. agricultural products after the Chinese government has asked its state-owned enterprises to suspend imports of U.S. agricultural products after President Donald Trump ratcheted up trade tensions with Asian nation last week. And then they're talking about how the yuan the values was crashing. And as we go down through here, at some point you get to, they show you that gold and Bitcoin are beginning to surge. Down here at the bottom, they show you a pretty scary chart here. It says, what can a financial crisis lead to? Trade imbalance, financial crisis, currency war, trade war, hot war. This is kind of scary. It says, like currency wars, first mover advantage goes to those who unexpectedly strike first. That was kind of creepy. I read that this morning, but it's true. All of these, ultimately, wars are fought over money, and that's where all this stuff normally leads. But there is one thing that is going to be interesting in this whole thing, because we will have global collapse. Write it down. This has been baked into the cake for a long time. Now, whether it's the beginning of it today or tomorrow or next year, I don't know. But I do know that everything they've done has created, it's set the table for this disaster. We've been talking about this for a long time on this channel. Okay. So now I wanted to show you this from Michelle Vandenberg, which is global markets. This is from CNBC. Global markets are in panic mode, sparking a wave of investment into gold, bonds, and currencies. They didn't say it, but they meant digital currencies as well. Gold prices jumped more than 1%. Global stock markets have panicked. Tom Elliott, international investment strategist at DeVere Group. Now remember, DeVere Group is the same company, and I can't remember the name of the guy that runs it, but I've covered the DeVere Group at least 2 or 3 times on this channel, because the CEO of the DeVere Group is extremely bullish, not just on digital assets, but specifically on XRP. He has had write-ups about him and what he thinks about digital assets, and specifically XRP, more than one time. The CBOE Volatility Index, known commonly as the VIX or Wall Street's fear gauge, climbed to its highest level since mid-May, while Europe's equivalent reached its highest since early January. Let's see if there's any. So talking about how gold rose, and let's see. At some point, they may have even mentioned Bitcoin in here. Anyway, it doesn't matter. Bitcoin and gold have gone up pretty significantly as a result of all this. Now, I want to show you something interesting. Where's Bob? At Bob and Deep XRP sent me this. Now look at this. Most people don't understand the scale of the collapse that is in front of us. Listen to this. This is a quote. There is no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as a result of voluntary abandonment of further credit expansion, or later as a final and total catastrophe of the currency system involved. In other words, what he's saying here, all these coward politicians who have continued to raise our debt ceiling over and over and over instead of doing the responsible thing. What he's saying here is, yeah, the responsible thing would have brought what's going to happen earlier, but all these cowards have done is pushed it down the road so that when it does hit, they won't be able to control it, and it's going to be 10 times worse. That's what that quote means. Now, let's go down here. It says, I wanted to read a little bit of this to you. This is madness. So we are not looking at one or two mad leaders today, but instead at a mad world where virtually every single leader or central bank head is mad. If they weren't, why would they attempt or print the world to prosperity with fake and worthless money, or raise unlimited credit? And why would they pay people to borrow money through negative interest rates? The next logical step is that all right, I'm going to go down. I wanted to go down. There are several things in this worth seeing. That here's part of it. Since Nixon closed the gold window in 1971, central banks have abused these two tools with ever-increasing frequency. The consequences for the world have been disastrous, but virtually no one has noticed. For example, the average house in the UK costs, 47. Is that pounds? 4,700 pounds in 1971. Today the price is 230,000 pounds. Even though you would only get a shed for that money in Southeast England. But they're just talking about inflation. This is inflation, is how savers can be crushed by government's irresponsible destruction of the purchasing power of money. Credit expansion and money printing have totally demolished the value of money and also the incentive to save. And then this is from John Maynard Keynes. Lenin was certainly right. There's no subtler, no surer means of overturning the existing basis of society than to debauch the currency. The process engages all the hidden forces of economic law on the side of destruction and does it in a manner which not one man in a million is able to diagnose. It says most people don't understand that the value of their money in the pocket is deteriorating all the time. They live under the illusion that prices are going up, which is totally erroneous. It is not prices that are going up, but the value of money, which is declining rapidly. Now, this is interesting, and this is about as true as it gets right here. If governments and central banks were honest, every year they would publish a table illustrating how much value the currency has lost in relation to gold, which is the only money that maintains its purchasing power. But since governments never do this, I will do it for them. Below is a table of the gold price for a selection of countries. The currency race to the bottom. These are the countries. The 1971, $35 would get you an ounce of gold. Then in 2000, $288, and now in 2019, $1,440. The drop in currency, 80% 2000 to 2019, 98% 1971 to 2019. And he says it here. The message couldn't be any clearer. Most of the major currencies have lost 98 to 99% of their value in real terms since Nixon's fatal decision in 1971. Now here's the question I pose to you folks. I can't tell you how many times that I have watched CNBC flash on the screen that Bitcoin or these digital assets have lost 80 to 90 something percent of their value in 1 year. They never show you what they've done over a longer period of time, and they never, ever would show you this, because this hurts their precious central bank to expose the truth of things. What you're really looking at here, this is the real truth. Look at how Bitcoin or any of these digital assets have performed versus these dollars over a 10-year period. There's no comparison to what we're dealing with here, folks. Digital assets are the solution, and they all know it. Now that you've gone over all of that, look at what the market for digital assets has done today. We're up to $311 billion. Now remember, this market, since we started doing well this year, it has gone up as high as, I believe, 370 or so billion, maybe 380. I don't remember exactly what the high was. But then it dipped down to as low as, I think, 250 billion. And now we're back up above 300. No telling where things go from here. We've got Bitcoin at 11,776. XRP's at 32.5 cents. Everything's showing a lot of green today. Now, let's look at this. This is from Rand Nooner. XRP Big Time sent me this. China markets down 0.5%. Hong Kong down 1.5%. Dow Futures down 125 points. Bitcoin up 5%. It's actually 10% when I just looked. We are entering a new cycle where investors are moving into Bitcoin when equity markets fall. That is what I've been saying since I began this channel, is that this is ultimately what would happen in these markets, because digital assets are the answer to the destruction of our money, period. And then there's this from at Crypto Utility Guy, at Utility Guy 7 sent me this. This was a video where the Jeremy Allaire from Circle was on CNBC this morning, and they just couldn't believe that now we're talking about Bitcoin and digital assets as a possible safe haven from these people who have destroyed our money. The Dow, by the way, is down. It's minus 435 right now. Don't be surprised if we have something nasty today. Jeremy Allaire said humanity has now created a non-sovereign, highly secure mechanism to store value that can't exist anywhere that the internet exists. And she is just blown away. She couldn't believe this. But the bottom line is, CNBC, you lose. Digital assets win because it represents the truth. What you represent is covering up for central banks and politicians that have been lying to their people for years and years and years. And you do lose. Whether you lose today or in the near future or within a year, truth is the only thing that will stand the test of time, whether that's in finance or anything else. Finally, I wanted to show you this. This is from Gimme Crypto, at retire_young_1. Interesting day. Yuan plummets. Hong Kong stocks matched longest losing streak in 22 years. Japan's yield curve about to invert. HSBC's boss resigns and announced 4,000 job cuts. Some people finally realize that crypto is a hedge. So it begins. I am the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe and hit the like button, and tell your friends and family that some people are finally realizing that crypto is a hedge against the lying of the central banks and these people on CNBC. Because that's exactly what it is. Money printing, QE, bailouts, bail-ins, all of that garbage is and always has been a lie. It is spinning something that can't be spun. And the people woke up to it with the creation of Bitcoin. That's the fact, Jack. Thank you for listening.